Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Wednesday, March 29th, 2017, and this is the Daily Report for Gold and Silver. We have a mixed bag in the precious metals markets, with gold trading slightly lower when we look at futures and trading slightly higher when we look at spot pricing. Gold currently trading off about $3.30. This is basis the April's futures contract at $12.5230. It's traded to a low of 46 and a high of 54. So as you can see, a fairly contracted daily trading range. When we look over to the June contract, net change off about the same, down 360 at 12.5530. We are long at 12.37. Low today, 12.50, and the high, 12.57. Over to silver. When we look at silver, that's trading, I would call it fractionally unchanged on the day, 18.25. Net change not even a full penny on the day. Low today, though, interestingly enough, it's held that $18 mark at 18.05. with a high of 18.26. And as you can see, we're teetering around plus or minus 1 cent. Not really much action. Now, the big news today is the dollar index, because it continues to rise after having a tremendous day yesterday. We talked about the fact yesterday that we were looking at gold prices under very, very moderate pressure, but that was with normal buying actually bidding the precious yellow metal up. But the net result with the strong dollar was that negative $3 slant. And we're getting much of that today, although we're only showing about a 0.25% rise in the dollar index versus yesterday, which was about a 0.5% rise. But nonetheless, last 2 days, we have seen a pretty strong dollar. A lot of this due to the fact that a lot of members of the Fed are speaking, and their tone seems to be a little bit more hawkish than perceived when we heard what they said at the last FOMC meeting. In fact, one of the members calling for the potential of 4 rate hikes rather than 3. And I think that that's what's really put some upside momentum in the dollar. So traders, over the last couple of days, we have seen the futures markets trading nominally lower, moderately lower on the day. We've also seen spot prices pretty steady, up $1, roughly in that area. And on both days, we have had a strong U.S. dollar, more than compensating for any kind of gold gain due to normal buying. When we look at the Kitco Gold Index today, and let me go ahead and bring that up or into the screen, what you will see is now, for a second day in a row, what we are looking at is gold, because of a strengthening U.S. dollar, losing a little bit over $3, normal trading bidding it up about $4, and that's where the spot market right now is showing a net gain of approximately $1 on the day. And even with that in mind, I think that gold has shown some real strong resilience. You can see that there's obviously some congestion in the market. You can see these series of lows here where we've stopped having the straight linear moves or spikes up, or the linear moves or spikes down. And we are getting kind of a sideways with an upside bias right now. That is the way that I'm looking at it. What I really wanted to focus on today is what I was looking at in the opening letter, and that is comparing Q1 of 2016 to our current performance now that the first quarter will come to an end in just a couple of days. The performance in the first quarter of 2016, in which gold prices ascended roughly 16%, was the greatest performance in gold since 1986. You can see that right here. Gold is trading at 1040, roughly in that area. This is that Q1, and it takes you, of course, by March and the end of March, you hit these highs, and then April is here. And so you get this a really, really dynamic gain following this incredible rally. Now, more importantly on that rally was the fact that this was the all-time low that gold prices had been to ever since they fell from 1900. The most predominant characteristic of the market was year in and year out having a lower high than the previous year and then a lower low than the previous year. Year after year, lower high, lower low, lower high, lower low, until the end of 2015, beginning of 2016. This, in fact, was the conclusion of this dramatic price decrease that we witnessed, this multi-year price correction. And the technical evidence that we needed to say that with some certainty is the fact that when we look at the high achieved last year, it is absolutely above the high that was achieved in the previous year. More than that, when we look at the low that was achieved last year, it was absolutely above the low that was achieved in 2015. So we had a higher high and a higher low. That certainly signals a bottom. Now, to give us the technical confirmation that not only have we seen a bottom, but that we're going to move either into a sideways or a new bull market, we then have to take a look at how the performance this year stacks up to last year. Now, the first thing that we can say is that as of now, the market has definitely traded to a higher low. These are our lows this year, here and here. So we've had consistently higher lows than what was witnessed at the end of 2016, beginning of 2017. And we need to, the final piece of the puzzle, as I put it, is that we need to really see the market take out 1380. If in fact it does that and we get a higher high, then we can say with real certainty that not only is that multi-year correction over, but we are probably at the beginning of another bull run in gold. Traders, maintain your current long position and maintain your current stop. In other markets that we follow, really mixed bag in the equities, with the Dow Jones Industrial Average trading lower on the day. It's trading at 20,659, down about 42 points. But when we look at some of the other indexes, such as the NASDAQ, which has been the most stellar performer of the indexes today, you can see that that's up almost 0.4% and getting close to the all-time record highs. So traders, yes, we have a mixed bag in U.S. equities. We're seeing a pretty nice recovery, or at least the stabilization of pricing in crude oil. But I wanted to focus on the dollar index this morning because we've absolutely seen some strength come into the dollar over the last couple of trading days after achieving this dramatic low that was well below 99 on the dollar index. And to me, the important thing was this 38% retracement level. And that is a simple retracement when we look at price structure from May 2016 up to December of 2016, beginning of this year, 2017, when the dollar index hit this high at about 104, just shy of that. Now realize the dollar index has been much higher. It's been as high as 120, 140 if we look at it historically. It's also been much lower. We've seen it at 70 and 80. But based on the last couple of years, we had this extremely strong dollar that came in towards the end of last year, kind of peaked out really at the end of January, right in here, or the end of December, I should say. This being January here, solidly down throughout to the beginning of February. From February, solidly up till the beginning of March. It's almost been a month down, then a month up. And then throughout March, we've seen it really tackle that, in which we've seen a solid month down. Now that we're getting ready to start April, we could in fact have a bottom and see it go back up. But here's a couple of interesting facts. The first thing is that when we do linear regression, which is what eSignal calls channel lines, which is what I call it, I've set this for a longer term 44-day cycle, and you can see that the bias, because the pendulum swings have been extreme, but they've ended up coming back where they started. In other words, the dollar was here, went back up, and is now roughly in the same area. You've got this bias, which is almost a neutral bias. In other words, it's not showing net gains or net drawdowns on a longer term basis. The fact of the matter is, as long as we trade above 99.24, that is where I'm earmarking support in the dollar, and then I don't see any kind of technical resistance till about 101 on the dollar index. So we'll have to see what happens, but we have seen this market get bid up over the last couple of days. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.